Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we're looking for a three-wave corrective structure, after which we then want to see continuation to the upside, continuation of the bigger trend. The scenario we're looking for here is a zigzag 5-3-5. Leading diagonal in a wave A, three-wave corrective structure in a wave B, and a five-wave impulsive structure to the downside in a wave C. The most common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of B, giving you a target between 52.6 and 48.5k, which, as you can see at the moment, is nicely respected. And the total target area for C also includes the 1.618, which is a bit of an extension target, 41.9k. After wave C, we want to see impulsive structures to the upside to continue the trend towards all-time highs. The area of support that price has hit over here has played an important role in the past as well. You can see that we had some support, some resistance, support, and now support once again. This simple support resistance area is sitting between 48.2k and 50.5k, but it is not the only level that was sitting there. Also, this level here, the value area high of a volume profile that you can take off this range on the weekly time frame. Important level on the chart, now retested, and potentially the low is in, and we look for impulsive continuation to the upside. We do, just to be sure, have some support towards the downside here, 44.3k, 45.2k, and 42.5k to 42.8k. We do not want to see the market structure change on a weekly time frame. We don't want this low to be taken at 38k, as that would significantly reduce the probabilities for a continuation of the bull market. If we are looking for scenarios where the low is in and we look for continuation to the upside, we want to count bullish structures, which means five-wave structures. And what you see on the chart here is a leading diagonal, a wave 1, 2, 3, 4, looking to end a wave 5, and then see a retracement to the downside before continuation to the upside. Now, in a little bit more detail, your wave 1 is a three-wave structure in an ABC, followed by a zigzag ABC to the downside in a wave 2. After that, we then have a complex WXY double zigzag to the upside in a wave 3, a zigzag structure in a wave 4, and we then look for a final three-wave structure to the upside in a wave 5, a wave A, a wave B, and then a wave C to the upside, where we do have some interesting resistance, which is the daily naked point of control at 58.9k. What we don't want to see is price moving to the 1-to-1 trend-based fib extension here, taken from the low to the high of 3 to the low of 4, which sits at 60.1k, because if price moves to the upside and hits 60.1k, this scenario is invalidated because a wave 5 is not allowed to be longer in price than a wave 3 in a contracting diagonal. The invalidation is also here at the low of your wave 4, right? Because we are looking for a three-wave structure to the upside in 5, and at the moment this looks like a single impulsive structure. So preferably we still look for this high to be taken at least once more before a retracement towards the downside. The most bullish scenario is a multi 1-2, where you have a leading diagonal here in a wave 1, then a wave 2 in green hitting the 0.236. And this is also what lowers the probabilities in this particular scenario compared to looking for a diagonal ending a 5 and then a retracement to the downside. The 0.236 is a very rare target for a wave 2. The most common target for a wave 2 is the 0.5 to the 786 Fibonacci, which is down here. We didn't even get close. The 0.382 by itself is already an uncommon target, and the 0.236 is incredibly rare. After labeling this a wave 2, we then have another wave 1, 2, and then another 1, 2 over here. The second wave 2 touching the 0.5, which is perfectly fine. And currently for this wide wave 2 here, the third 1, 2, preferably, of course, we retrace to the 0.5786, but at least we hit the 0.382. It's an uncommon target, but it is a target nonetheless for a wave 2, and it is far more common than hitting a 236. Just a short side note, and to be a little bit nitpicky, I suppose, is in this wave 1, we then have a leading diagonal to the upside because of the overlap. 1, 2, 3, 4, 5 overlap over here, as you can see. And this wave 3 is very long compared to your wave 1. If you take a trend-based strip extension from the low to the high of your 1 here to the low of your wave 2, you toggle on the 1-to-1, then you can see that this wave 3 passed the 1-to-1 by quite a margin, and that is not really something you like to see in a leading diagonal. It's not an invalidation, right? But in a leading contracting diagonal, preferably your wave 1 is the longer structure, your wave 3 is a little bit shorter, and your wave 5 is a bit shorter than 3, and then you get the retracement. Now wave 3 being longer than wave 1, again, it's not an invalidation, but it is not really something that would increase the probabilities for that particular scenario. Right now, in this particular case, if this scenario would play out, this resistance here should be absolutely peanuts, right? We are looking for a very impulsive wave 3 to the upside, a big move, high amount of volume, but it doesn't have the highest probabilities, at least not compared to what you see on the chart here, which is the leading diagonal to the upside, after which we then look for a bigger retracement towards the downside. On the 3-minute and 5-minute time frame, we have very locally here hit the 886. It is taken from the high here to the low, and the fact we touched the 886 increases the probabilities. Everything here is corrective and increases the probabilities for price to take out the high. The reason is that if we want to see a more significant corrective structure to the downside or impulsive move down, we want to preferably label a 1, 2, and then a 3, 4, 5, an impulse to the downside. But the 886 is a very rare target for a wave 2. It is, however, common for a wave B or a wave X, increasing the probabilities any move down is a wave C or Y, increasing the probabilities to sooner or later take out this high. If we look at the CVD divergences, then so far the bullish CVD divergences have played out nicely. The first bullish CVD divergence here at the low played out, price moving to the upside. Then we had some bearish CVD divergences that also played out, and the bullish CVD divergence that also played out over here, price moving to the upside. Two bearish CVDs also again played out. Another bullish CVD also played out. Now, CVD, in my opinion, is the best indicator out there. And if you just look at this section over here, only once did the CVD divergence not play out on a 50-minute time frame. Absolutely incredible. We have some bearish CVD divergences here locally, and it says it didn't play out, and that is because we actually didn't take this low. But we did have a solid move to the downside, but we didn't take this low, so that is why there's no check over there. But we do also have some bullish CVD divergences again, right? And the bullish CVD divergences here locally are also in nice confluence with the 886 touch that I just spoke about. So because of the 886, the probabilities are higher to at least at some point take out the highs here, and the bullish CVD divergences that we have here support that narrative, right? Now, of course, we can range here for a while, that's absolutely no problem, but the probabilities are higher to sooner or later take out those highs. So if we then look at the probabilities in total, then locally over here, the probabilities are higher to at some point take out the highs here. We touched the 886 confluence with the bullish CVDs, and it's also in line with the bullish scenarios that we have, preferably the diagonal being the higher probability scenario on a 15-minute time frame, which is what I write over here. So on the 50-minute time frame, currently the probabilities here are higher for a diagonal compared to the multi 1-2, meaning looking for this grind towards the upside to end at some point, look for resistance and a bigger retracement to the downside. And that retracement is going to be important, because if we then do get a retracement towards the downside here, we want to see a three-wave corrective structure, a zigzag, a flat, right? Anything but a triangle, because that's not allowed in a wave 2, but we want to see a three-wave corrective structure down and then a move up once again. If we get impulsive structures down, we have to be very careful and very aware of potential continuation, but at the moment that is not yet relevant. So this scenario has a higher probability compared to the 1112 simply because of the 0.236 and arguably also your wave 3 here being longer than your wave 1. Now, a short reminder that on the weekly time frame, we are looking for another wave 5 towards the upside, right? So for the bull market to continue to new all-time highs. And on the daily time frame, as I've shown here in this video, the higher probability is also bullish. We hit the most common target area on the daily time frame for a wave C, right? So this is, of course, an area of interest for potential swing longs and a move towards the upside. And it would be nice if more locally on a 50-minute time frame we can get some confirmation of a 5-wave impulsive structure to the upside, a retracement, and then a continuation, right? I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.